check. Ladies and gentlemen, we are in Hall A, and I request all our members who are outside the Hall A to kindly join us inside, as we would begin with our presentation in few moments from now. Requesting all our members, our guests, our invitees who are outside the hall to kindly join us inside, as we would begin with our session in few moments from now. Console, please level check. Check, check. Console, may I have your attention, console? Level check. Check, check, check. Yes, better. Thank you. This is mic check. Once again, ladies and gentlemen, may I request everyone who is outside the hall and can hear me. This is Hall A, and we would first begin with a presentation here on driving insurance adoption through technology. May I request everyone outside the hall to kindly join us inside, as we would begin with our presentation in few moments from now. Gentlemen, we are in Hall A, and we would begin with our first presentation. Our presentation is on driving insurance adoption through technology, and we would request Mr. Ratan Nayak, Senior Vice President from Bimaplan, to kindly join us on stage and make the presentation. Please put your hands together as we request Mr. Ratan Nayak to kindly join us onto the stage to make the presentation.
देखना उधर आएगी. Good afternoon, ladies and gentlemen. Since yesterday, I've been hearing we are talking about digitalization, how microfinance should use the digital technology to penetrate in the rural market, and what kind of innovative we can do, and what kind of a penetration we can do through digitalization. So here we come as a Bimaplan, and we incorporated about 3 years back, and this is our third year operation. Here, we are all veterans in the insurance industry last 20 years. We joined together and we found the insurance industry penetrating more on our tier 1 and tier 2 cities, and largely on the broker and the corporate segments. But when we found in this, gray area was that, blue-collared people, underprivileged people, what kind of the insurance product to be given, what kind of the, the penetration should happen, and how the digital technology can penetrate in this area. So never they have been taught, and they are not ready to invest so much money or the time and energy into this frame. So then we incorporated ourselves and tried to find a solution with the segments like MFI, NBFC, and we have been very successful in the last 2 years. We have enrolled many partners and many customers also. So let me go through the presentation. Excuse me, the slides are not moving. Yeah, it's on. So we are one of the India's largest insurtech, we can proudly say that, platform. So what we do is that we are a one point of a solution to any microfinance or NBFC or a business correspondents. We develop an API technology with a various products, not on a single life insurance or the general insurance or health insurance. You name the product, we are into that. We create an API technology, and that technology we white label it into a MFIs or a NBFCs, And when you do sanction a loan, and with the same OTP, we gathered all the information through the technology into our system, and simultaneously, within no time, it passed on to the insurer, respective insurer. And within the 5 minutes, when you are sanctioning the loan, dispersing the loan, the customer will have his insurance. Here, the best part is that here no documentation process on the physical documentation. There is no to and fro of the documentation. And the third one is that, the customer gets on a real time the certificate of the insurance during the sanction of the loan itself, or the sanction of the whatever, the reimbursement or a disbursement of the loan itself. This company is founded by Mr. Vikul Goyal. This is his second venture. The first venture was a car crew which sold to, TVS Motors. And our leadership team, as I told you, we have a successful track record of, almost 22 years in the, microfinance segment. So we are very, very experts in that. We help into end-to-end solution. The first problem what we found is that MFIs are struggling to do a to and fro of documentation, either it's on the claim or on the customer onboarding or any other service issues. Number two, these MFIs has integrated with so many insurers. Now they need to talk multiple insurer for the multiple solutions. So here we found a platform, we created a platform wherein you can use this platform at a free of cost, and you can embed this platform, and you can interact with a multiple insurer through this platform itself. You don't have to call upon multiple insurer for the claims. You don't have to call upon insurer for the, rates or the payments or the customer service. Everything happens here on the single platform. So far, we covered in the last 2 years, 22 states. We have acquired almost a 1 million plus customer, and also 150 million premiums we collected through this platform, and we have onboarded 80 plus partners. Here there are small finance banks as well. I mean, thankful to Unity Small Finance Bank, they are using totally our platform for their multiple insurers. Many NBFCs, many BCs, I can name, Magalir Microfinance was one of the microfinance start using our platform way back about 1.5 years back, and Prayas Microfinance successfully, totally, technologically utilizing our platform. So as I said, the solution designed in multiple things. We have categorized two. One is that financial services, and second one is the rural, kind of a agri startup, all those stuffs. So in a financial services, we serve to NBFC, microfinance, small finance banks, neobanks, and fintech startups. There are so many, lending fintechs has come into a picture, and we are helping them as well. And apart from that, we are also have a, mobility, gig economy, like, the self-help groups, SME platforms, factories, those groups also we help. And, e-commerce platform also, we are helping this technology. We believe on that, 3 A's. One is awareness, educating the customers, accessibility, and affordability. When I talk about accessibility and affordability, I can give you a live example. When I go to some NBFC or a MFI, they are not aware of how much money to collect. They are just collecting whatever insurer asks them to collect and paying it to the insurer. But when I sit with him and analyze that, I say you are collecting 500, 600 rupees. In that, if you really study and orchestrate, you can give at least 3 to 4 products, not one product. The product as simple as 50 rupees product, 40 rupees product for the farmers, which can cover, it is called a vector-borne policy, which can cover snake bite, COVID, or dengue, or in case of a personal accident also it comes into a picture. So we can design those kind of products to the farmers, or to the gig workers, or to the small workers, and create multiple products. So that is our expertise in that, and that is how affordability come into a picture. If an MFI says that, Ratan, I am collecting 500 or 600 rupees, what all the product you can incorporate? I can give 3 to 4 products as well in that. So that is our product construction that we help. So that's how we call it as an end-to-end solution. You don't have to worry about, like a broker or a corporate agent who comes into a picture, you just come for the, for the code generation or the lead generation or the giving the rates. No, we help into construction of the product, real-time issuance, onboarding the customer, and even as the claim settlement. Everything happens into this tech platform. So this is our, plug and play embedded platform. It's just, plug into your system, and it will be white label to you. When your branch manager, he will have one insurance tab. In that, we can do a customization. We can do a single API integration, multiple API integration with the multiple insurers. And as I said, we will help you into that claim management and, retention of the cross-sell or timely payouts, whatever you require, you can utilize that. And you can have analytics as well. On the branch wise, we can have on the day end, by sitting an HO, you see in the platform that, which branch has sold how many products, what all the products which has been sold. And another solution what we will have in this is that once you collect a premium, it just come to our platform. The bifurcation of the premium, it happens in the technology with the different insurer. So what rightly is happening is that, whichever insurer you are collecting the money, you are separately sending, you are separately creating a MPH and passing it on to different insurer. This technology bifurcates, simultaneously in the real time. It goes to the real time to the insurer and give you back the, the policies immediately. One of the success story, there is a unicorn company called Samunati in South India. So Mr. Anil ji was carrying a dream project of covering 6 crores farmers, a project called Annadata Suraksha. So no insurer were developing a product or giving in a 40 rupees, 50 rupees product, but we were the one successfully given the software, designed the product, and so far in the starting itself, we have covered more than 6,000 farmers in this. So these are any kind of the project we can design through this technology and make sure that customers should get benefit. When it's come to claim process, this is one of the best claim ratio we have, and the reason behind is that when we discuss with the actuarial of the insurance companies, what we do is that we design the product wherein 99% claims should be settled. It's all a pre-underwritten product. So when it comes to the claim, it should be easy, simple pay through. So that's how the product is designed according to that. This is about our company, and any questions are there, I'm ready to answer. Or else, I have given my numbers, and you can connect with me, and I can come, my team can come to your place and give the presentation, talk with your tech team, how we can embed it within your system. Thank you very much. Yeah. It is, yeah. No, it will not come through the company. Yes, it comes through the software. Like you are an MPH, let's say, you have an MPH account with the insurer. So our system is integrated with the insurance software itself, with their finance team. Cannot route it through? No, it's a MPH account. There is a master policy holder account created with the insurer. When we create a master policy, because these are all the group platform, this is not a retail platform. When you do a group platform, there is an MPH, master policy holder. That account has been created with the insurer. So there you will keep the float amount, let's say 1 lakh rupee float amount or a 2 lakh rupee float amount. When your branch manager collects the premium, directly transfer to the MPH account using this platform. Yes. Okay. Yeah, insurer. So that there it will go directly. Money part will not come into a picture here. But see, as soon as you collect the money, it goes to the NPH holder account in the insurance company. Then, according to the, let's say you have collected a lakh of rupee of a, 1,000 rupee each. So it goes there. Then you give the data, upload the data. So it hits to that bank through my system and, remit it to the account wise to the customer. And this is under regulator preview. It's a nothing like that, beyond the regulator preview it happens. Is that.
Thank you very much. Thank you.
For sharing those information with us. May I now request the Managing Director of NABFINS and also the ex-board member of Sa-Dhan, Dr. Diwakar Hegde, to kindly join us on stage and present a memento to Sri Ratan Nayak for his wonderful presentation. Thank you so much, ladies and gentlemen. We now directly slip to our Breakaway Session 5. Our Breakaway Session 5 is about the leveraging ESG for sustainable growth and sustained capital flow. And please put your hands together as I invite the moderator of the session, founder SRIJAN and Buddha Institute, Mr. Arya. Very warm welcome to you, sir. May I also request all our distinguished speakers of the session to kindly join us. We invite Member Advisory Committee to SEBI on Social Stock Exchange, Ms. Jyotsna Sitling. Very warm welcome to you, ma'am. May we also invite on stage Managing Director, NABFINS, Dr. Diwakar Hegde. Also inviting on stage Director and CEO, Svamaan, Financial Services Private Limited, Mr. G. Kiran Kumar. We also invite on stage ESG and Impact Advisor, Dr. Agyeya Trippathi. And we're also being joined on stage by CEO, Prayatna Microfinance, Ms. Somya Srivastava. Before I request the moderator of the session to take over, may I say a few words about him. Mr. Arya is a founder of SRIJAN and Buddha Institute, as we already mentioned. He's also the member of the technical group, Social Stock Exchange SEBI. And we'll also like to say a few things about him, about his awards that he's received. He was awarded several awards like ICICI CNBC Inclusive India Award in 2013 and the Vodafone Mobile for Good Award in 2014. With those words, may I request you, sir, to kindly take over.
Before we start, I think the best way to introduce people is to ask them to talk about themselves. So I'll request, starting from Kiran, and if you can do it in 60 seconds. That's it. Pitch you can make. Yes.
Hi everyone. My name is Kiran. I've been leading Svamaan Financial Services for the past 5 years now. Svamaan is a new age NBFC. We are one of the newest MFIs in the country. We launched in 2019. I graduated from IIT Roorkee, worked for 3-4 years outside India, and then came back to India because I wanted to do something here. So we've been ranked as one of the fastest growing MFI for the last 3-4 years now. And ESG is close to our heart, so thanks a lot to Sa-Dhan for inviting me to be part of this panel. Thanks a lot.
Good afternoon, everybody. I'll stick to 60 seconds. Good afternoon, everybody. I am Diwakar Hegde. I'm Managing Director, NABFINS Limited, which is headquartered at Bangalore. It's a subsidiary of NABARD and already completed 25 years of its journey. And we are working across 19 states and Union Territory, presently having around 450 branches and 2,500 crore plus AUM. And we are having products which are catering to the JLGs, SHGs, and one unique thing is we are also catering through the NGOs, we call them as BNDCs. So I think that is one unique model we are having. I'm also having our ex-MD who is sitting here, and one of our board directors, Mr. Ajay Kapoor, who is sitting here. So
Thank you. Yes, good afternoon to you all.
I'm Jyotsna Sitling. I'm member advisory committee to SEBI and Social Stock Exchange, and I am also special monitor, National Human Resource Commission. So on skills, employability, and livelihoods, basically. So basically, forester by profession, but I've mostly worked on livelihoods and equity and environment and public participation have remained my areas to work with. That's how I am now in SEBI, maybe to look into this realm. Thank you.
Hello. So I'm Dr. Agyeya Trippathi, and thank you, Sa-Dhan, for inviting me and sharing the dais with eminent personalities. I worked with basics for almost 10 years, and in India, Africa, and Asia Pacific countries. Currently, I'm working with few MFIs and non-financial companies to set the ESG standards and the SDG alignment standards for them. One of the companies with which I am working is based in Germany, which is called Agents for Impact. And I am advisor to them for SDG alignment and ESG indicators and the ESG risk profiling of the companies. Other than that, like there are few assignments here and there, so mainly independent consultant and a freelancer in this field for past 5 years. Thank you.
No, I was just going to say that. So I'm the youngest and, of course, the least experienced when it comes to experience, with the esteemed panelists. Thank you so much, Didi sir, for giving me this opportunity. So I am Somya, the founder and CEO of Prayatna Microfinance. We're a new age microfinance, only started in 2018. And since then, today we have about 100 branches. We've dispersed to more than 1.5 lakh women, and in addition to 600 crores. So before microfinance, I would mostly have my experience in raising funds in the healthcare business that I was a part of. Thank you.
Thank you. So once again, I want to thank Sa-Dhan for putting together this panel with eminent people and great mix of young and old. So old people with wisdom, but young people are always ready with new ideas. So welcome. I thought the way we can organize it, there are two questions that, out of the many questions that we want to deliberate on, to be of great help to you. And I want to welcome the audience. This is not my field. By the microfinance, I know nothing. So that means this is a great advantage. I learn a lot from the session. Two issues we want to work in a little more detail, and hopefully we'll come with some recommendations for Sa-Dhan to implement. And one is that there's so much noise or buzz about ESG, nationally as well as internationally. I was recently at a SOCAP conference in San Francisco, and again, we talked about impact investing, and ESG can direct impact investing. Also, previous year also when I attended, so much. But is that available to Indian organizations, particularly to the MFIs, who are the audience today here in this hall? Second, with great direction and leadership of the Honorable Finance Minister, Nirmala Sitharaman, we finally actually got the SEBI to issue the guidelines for social stock exchange, where I left Jyotsna is carrying forward. So how feasible it is for MFIs to participate in the social stock exchange platform? It is, so I thought as we begin, although we should begin with ESG, but since I was involved in the social stock exchange as a member of the technical group, it may be useful for the audience here to get some broad basic background to what the social stock exchange is about. The idea, of course, I think is that the not-for-profit organizations and for-profit enterprises, both social enterprises should be able to raise money just the way private capital is raised for the private companies. Is that possible? Of course, Jyotsna will say we should start with a statement. It has failed all over the world. Will it succeed in India? So we started all of that with every meeting. We had 10 meetings of technical group. but we always started with despair but ended with hope. That's why you finally got the recommendations and now you have a gadget notification. I'll urge every member of the audience to read the Social Stock Exchange gadget notification. I'm here to give you a very broad brush idea of the eligibility of a social enterprise. See, often the government regulations and government notifications have to take care of the negatives also, that people don't take advantage. So we had to look at what qualifies a social enterprise to benefit from a social stock exchange, which is on the BSE as well as on the NSE. So we spent time on defining the social intent, that anybody who wants to benefit should demonstrate social intent and, might I add, social impact in their track record. So intent has to be demonstrated, but it has to be demonstrated by some track record. So three broad objectives have to be established for primacy of social intent among the social enterprise, whether it's for profit or it's not for profit like the NGOs. There are 17 eligible activities. If you look at the CSR, the circular of the Ministry of Corporate Affairs, plus we looked at the SDGs, and also we looked at the identification of activities by Niti Aayog. Put together, there are 17 activities, 16 plus 1. If 1 means it can be notified by Government of India. That is there on the, but education, health, even gig economy, skills upgradation, disaster, climate change, all of that is reflected in the activities that can be called charitable activities for which the social enterprise is working. Second, the social enterprise has to be impacting vulnerable or underserved or less privileged population segments, or in the regions such as what Niti Aayog says, aspirational districts. Now it says aspirational blocks. Some people will call it aspirational regions that they have identified where the government's priorities lie. Third, and this applies, Somya yesterday was talking about it, that social enterprise must have 67% of its activities benefiting the poor people in three ways. Either its revenues, or in terms of expenditure, or its customer or beneficiary base should have 67% people among the poor people. So that is the definition by which any BSE or SSE will measure or seek the eligibility of anybody who is applying. By the way, it is open, registration is open both on the NSE as well as the BSE. So I'll not go more into the definitions of the thing, but to make it happen, there is a capacity building fund that is in control of NABARD, 100 crore rupees to make this whole thing move forward. There is also social auditors to make sure that actually there are the results are visible, and I would ask later Jyotsna to elaborate on that. But this is just a background. Now I want to start by asking Mr. Trippathi to the main topic. How MFIs can benefit either from the SHG or from the Social Stock Exchange. First on the ESG. Dr. Trippathi, please tell us if there are organizations, financial organizations, such as the pension funds in Europe or pension funds in US, they are looking for investment in India, and because the returns in those countries or that continent is zero or very little, they are looking to MFIs. MFIs therefore could be a prime borrower, I won't call the term target. So what is it that they have to look at if MFIs were to become eligible? What is it that they have to learn? So you have about 5 minutes to talk about this.
So thank you. Thank you for setting the context right. And before getting into the ESG part, that how the investment funds are looking at Indian microfinance institution or per se any microfinance institution, that how we are getting into the country, they actually see as a risk component. And when we say risk component, so ESG frameworks are used to identify the risk first. Because if risks are lower, then obviously the returns will be higher. Or we can somewhere actually quantify and somewhere we can say that, okay, this is going to be the discounted price for you because the risks are lower. Now, why these companies are coming in India? One of the reasons, as Sir clearly said, that there are pension funds and there are different kind of funds available outside India, and the amount of interest which they are actually making in their banks or in their financial institutions is zero, and in many cases it is also negative. So they are always looking for places where they can invest these funds and get some money out of it, right? And this money is not like very like more than 10% or 12% or something like that, because we have to understand that hedging cost is already like 6%. So they are bringing those funds out of their country and putting it in another country. So there is always a risk involved, which is like a forex related risk or some other risks also. So that is why we are able to see that impact funders are also asking for 12% to 18% rate of interest. But clearly the amount of money which they are getting out of all this activity is in the range of like 3 to 5%. That's the real case, right? Now the second part of it, that if as a MFI, if I am looking forward for these funds, how can I get these funds? So the first thing is, I've seen like working with like almost like a dozen MFIs right now in India and outside also. The basic difference with what I found in Indian MFIs is like they don't have that intent to work upon ESG, but they want to copy paste some policies and then make it a part of their docket and then give it to somebody so that funds can come in. Now, one thing we need to understand, because we have to prove it with the data, and we are collecting data in most of the MFIs, but the kind of data which is being looked by them, which is being looked by the investors, is different. So we need to understand that what kind of data is required at their end. The kind of data which they are looking at is completely matching with the GRI indicators and the SASB, which is like the sustainability accounting standards. Even in India, if we see the BRSR reporting framework, it is one of the steps which was taken by SEBI that, okay, yes, Indian organizations should come up with the sustainability reporting. So there is a clear link between the sustainability reporting and the ESG framework. And how are they connected? Because we need to understand that all this started with MDG. MDG got converted to SDG, and SDGs are clearly demarcating the PPP, the triple bottom line. And when this triple bottom line is there is a planet, which is the environment, there is people, which is social, and then there is planet, right? When governance comes in, actually it's a binding factor for all this. And within governance, I think the Indian MFIs needs to work a lot. One part I can always say that yes, there is a lack of awareness because MFIs don't know what reports should be made, what kind of data should be collected, how it should be analyzed, and what is the evidence for that data. Because even if you are collecting this data, how you can ensure that data is not fudged? Because those agencies actually get into the transparency of data, whether you are collecting this data through a manual procedure or it is automated. So if we are able to identify what exactly they are looking for, I think half of the problem is solved. Another thing is, most of the MFIs, and it's an irony that most of the MFIs are collecting data, maybe 10 or 20% plus minus, but they all are collecting data. The only thing is, if we add those KPIs, those key performance indicators, I think we are done with it. We only need to get hold of those investors. We can showcase what we can produce as an interest or as an investment case study, and then maybe funds can be raised.
Dr. Trippathi, thank you very much for highlighting what problems that the MFIs face in reporting. Can you also talk about climate-related financial disclosures, TCFD, because we are talking about climate funding in a big way all over the world. So social you talked about, but can you also talk about climate?
So I have not touched climate because you said 5 minutes.
I created a climate.
Yeah, thank you, sir. So climate is something, again, so getting back to the European funds. So if we go into European funds, they follow a regulation which is called SFDR. And with microfinance, there is called Article 9. We need to comply with that SFDR Article 9 framework. If we get in contact with anyone who is based in US, then the framework which we need to follow is TCDF. So we need also to understand that what kind of funds we are going to generate, or what are the kind of funds we are targeting. If we are targeting more climate funds, obviously the kind of indicators which we need to follow are climate related funds. For example, MUFIN microfinance, right? So MUFIN is one of those microfinance which is working in EV vehicles and other areas where climate funds are happening, or climate related or ESG, not exactly ESG related we can say, but yes, environment related products are there. Other few MFIs are also working in those areas. So if somebody, so again, this is actually, if you want, I can touch upon the part of carbon credit. Yeah, because climate is something, try to understand from the perspective of an investor. Social impact is something which is more qualitative and less quantitative. But climate is something which is more quantitative and less qualitative. Now the good part of climate is that we can quantify the impact soon. And the bad part of social is that quantifying social impact is something which will come a long way. That is why in Indian microfinance institutions, if you want to go high, create products which can give good results and in a short span of time. They are looking for like 16 months window. So if you are able to create a product or design a product which is a climate related product or environment related product, the chances of getting those funds is easy.
Dr. Trippathi, we should celebrate you because I think this is not a new opportunities for MFIs, people who are present here, to how to design new product, will open new doors or gates for you to get funding. But funding doesn't mean you get money and you have to employ it somewhere. So that gives me perfect platform to talk to Dr. Hegde, who will bring not only in the case of, let's say, SRI cultivation, if you are giving money to, it satisfies both social as well as climate dimensions of finance. Please do talk about that and also give examples of blended finance.
Thank you. When I was listening to Dr. Montek Singh Aluwalia's session in the morning, I was getting a feeling that microfinance sector is seen from a different optics. Though it is, I mean, we can tick all the right boxes, you know, whether it is catering to the vulnerable section, whether it is catering to the women, whether it is catering to the remote areas, whether we are giving without collateral security, everything is right. But it is seen as a credit rather than a social enterprise helping the society to maybe getting included. So for that purpose, that ESG component in our whole activities to be properly, I think, measured, monitored, and a framework has to be created for that, so that we can definitely say that we are also, it's a social financing rather than microfinancing, or we are making money out of it. Coming to our own experience, I mean, I carry experiences from NABARD. So NABARD, when we tried this kind of products, you know, especially for the capturing the ESG in our products, financing products. What we have done is, one major project we did was the loan product I am referring to, with the help of KfW Germany, NABARD together implemented a project called Natural Resource Management Project, wherein we provide for the core activity, the amount will come in the form of loan only. So there is no question of grant. But there will be some grant component, maybe 10%, 12%, something like that, which will take care of the capacity development, marketing initiatives, all those things. And through this, we have funded through MFIs, we have funded through banks, NGOs, NPOs, all were our partners, NABARD partners. And what we did was, like Mr. Arya has rightly said, we have done 20,000 hectares of rice cultivation through SRI in Karnataka and other states. Even SKDRDP was the major partner for that. So there, this kind of blending a finance, I think definitely we can meet the environmental goals and also social goals, because we are saving water, we are saving the carbon dioxide emissions are far less here, and it is with a lesser cost of cultivation, the poor farmer is able to produce. Similar kind of dairy activity, similar kinds of integrated farming, all these models have been developed. More than 300 crore worth projects have been implemented across the country with this model. We have got more than 150 partners for this. from all kinds of institutions, whether it is banks, cooperative banks, RRBs, and based on this model, SBI and IDBI, I'm very, I should say this, they have also financed based our model SSI, Sustainable Sugarcane Initiative in Maharashtra, which with the help of many sugarcane factories. So this kind of joining hands, I think definitely MFIs also can do in the similar line where we can develop products, and NABFINS, I can share two examples from NABFINS products. One we did for post-tsunami in Tamil Nadu, where government of Tamil Nadu gave us some grant support so that we can provide the concessional finance to the affected families, communities in the coastal areas of Kadlur and other areas. And this way, the blending of these two helped the poor women to start their own enterprises, whether it's the fisheries or any other related activities, and make them sustainable. And second one was in Maharashtra, where with the corporate foundation we joined hands and made this dairy activity. Typically microfinance loans will be a bit expensive. For taking up any economic activity on a sustainable basis, it will be a bit challenging. So blending these two, the foundation provided us some grant support, and we also added biogas and all so that it will be more environmental friendly. And this project also has helped us to a great extent. These kind of, I know that there are challenges, but these are promising examples which will help us to work in this direction. Thank you. At this juncture.
What we are seeing is that probably there is learning for the private microfinance institutions. I'll come to Kiran and Somya. What NABFINS the examples can be source for exploring new ways, and by that you can reach even poorer communities is the example of fisheries community post tsunami, that you could help them is in those disaster situations. So let me again talk to the young lady, and then I'll bring Kiran as to what is so this is a government experience. Still I would bracket you, if you don't mind. You are a government organization. So let me now turn to private organizations, how both of them have done wonderful job in a very short time. I'm going to compliment them, and I'll request the audience as well to congratulate them. From your experience, what is the difficulty you have faced in raising money, or you may potentially face from ESG kind of funding or from SSE? Could you elaborate on that? Building on the great work that you have done of 600 crores that you have outstanding loans.
Thank you. So I'll just begin about talking a little about where our industry has reached today. We've been in this conference. Yesterday, Govind sir also said that, an average ticket size now year on year is increasing from at about 12%. I mentioned that even my average ticket size has increased in the last 2 years. After the deregulation of interest rates last year, now MFIs are able to provide more efficiently. Third point would be that the needs of the clients that we are catering to are also increasing. Now they're more aware. They ask us, why are you charging this interest rate? Or, they know what the other MFIs are doing. They also have more needs. They want more products. Apart from what we give them, they want, maybe an additional product. So that is also there. Then a lot of new MFIs are graduating clients from joint liability group to individual loans, which are of bigger ticket size. I think SIDBI mentioned yesterday that through their Prayas scheme, they're doing about 1.4 lakh women, and the average ticket size is 1.25 lakh. So that clearly shows that the demand for MFI clients are also increasing. And Sadaf sir also mentioned that we are satisfying 7 out of the 17 SDG goals. And as far as ESG goals are concerned, I think, we all spoke about that. So now coming on to what is MFI we're doing, I identify, as far as SSE is concerned, I identify myself as a for-profit organization. And I also satisfy the criteria which said that, I should be operating in areas which are of underprivileged, underserved population, and also that are of relevance to the state and the central government. So we're doing that. The problem that we face, that you also mentioned, Ved sir, in the beginning, is that now that the clients are more mature, they're demanding more for me to satisfy certain criteria, which is, 67%, because, so out of the criteria, I fit myself in, let's say, agri. If I have to maintain my agri portfolio in addition to 67%, then I'm losing on clientele that is asking for apart from the agri clients that I have. I lose that, and then, for SSC, I don't qualify. I just cannot, I don't need to register myself because I'm not I'm a for-profit organization, but still to seek funding, I don't satisfy the criteria then. As far as, impact funding is concerned, I have my personal experience with a fund based out of Frankfurt, and that's, where Sir can say, I feel MFIs like ours, we need a framework and as guidance as to how we can benefit from, these ESG framework and the impact funding, how to demonstrate the real impact that we're doing. So, we are submitting our data, and our data that MFI submit are measurable today and quantifiable. Both ways you can do that. It's not that it's not measurable. We're doing significant impact. Now today, our Prime Minister is talking about, everyone's talking about microfinance, from where it was to where it's reached today, it's creating noise. So how MFIs like ourselves, which are not yet the biggest, we're trying to get there. So for us, this really matters, how we can take advantage of this and how impact funding can actually reach us. Because what happens is, MFIs like ours, there is funding. So what usually happens, and which was mentioned at the session yesterday, the bigger MFIs take it and then they give it to us. So the cost to the client, the bigger MFIs will give it at lesser, we will give it at more. So we're also at the losing end, and so is the client. So how, we can see all this, and that's where advisors like Sir come in place. So that's what, my submission would be.
One area for Sa-Dhan that is emerging is that how to bridge the information gap and the knowledge gap between the standards that are established by the financiers or the institution that can give money from Europe or wherever, and where the MFIs are in terms of demonstrating their impact. They are making social impact, but are they collecting data and are putting it out in the form of a report that is admissible to people who are giving money? Especially what is the challenge that a smaller MFIs face in terms of resources that may not be available to them, and also, so what can Sa-Dhan do to solve such a issue? And second one, experience that is available with NABFINS, is it available to the other MFIs also? Could that be an area where Sa-Dhan could play a role? So I thought I must keep highlighting. And then Kiran, you may not be small in terms of who's supporting you, but still you've done a wonderful job. So what are the key issues for MFIs in your case, for ESG finance?
Yeah, thanks a lot. I think other panelists have spoken a lot about the current setup and what is going on. I will touch base upon the current regulatory landscape a little bit, right? I think as an MFI, we've come a long way since 2010 Andhra crisis, where the original, qualifying criteria, so to say, to be an NBFC MFI used to be based on indebtedness of the end borrower. And we worked with that. We've kind of now graduated into a FOIR-based regime where EMIs are considered. But fundamentally, the MFI, as a model, has catered to the masses of the country. So we are already catering to 6 crore households. And the basic transition that is going to happen in the next 5 to 10 years is these 6 crore households most probably will grow to 10 crore households, and all of these households will transition on the energy pyramid, right? And MFIs are best placed to cater to this entire household transition in terms of the energy transition that is going to happen. And we are best placed to cater to that need. And that need requires a lot of capital building. Till now, what is happening is MFIs, due to the nature of the license, are only limited to, unsecured lending to the households, which is itself creating problems. Right now, for the entire year today, RBI has been releasing notices regarding how the unsecured loans in the overall GDP has increased tremendously, and at rates, which might not be sustainable, right? So the easiest way to break this is let MFIs, over the course of the duration, as we are transitioning to becoming bigger, maybe we allow MFIs to help create this asset class which is more secured in nature, which is driving ESG, and it drives capital asset building for these households. I think this transformation will open up the capital that is required for all these bottom of the pyramid households to make the energy transition, properly. Because now when we go back to our customers, as some of our panelists have also mentioned, customers are demanding more products. One of the products, for example, we offered to our customers was, if we give you an EV two-wheeler, will you be interested to take it? And you'll be shocked, in 2 days we received 1,000 leads, right? So there is a definite need, customers are aware, and as a country I feel we are much more progressive than a lot of the other developed countries as well in making the green transition. So we are already at, I think on the EV sales, we are 25% of the sales are EV in the overall three-wheeler market. And even in two-wheeler, we've already touched 5%. And this ratio is only going to go up. And the transition can be, fastened if the MFIs and the entire NBFC landscape, which is catering to these households, are allowed to do a lot more asset building in this segment, and we can make a much, much better transition on the ESG front. And touch basing on, I was talking about the environment part, talking about the social part. I think as a regulated entity, for us, there is always an issue that we are catering to the bottom of the pyramid customers, so they are very vulnerable. And the client protection principles become very important in this context to maintain client protection, to adhere to good collection practices, considering the vulnerability of our households that we cater to. So that will bring up the entire social framework up. And in terms of the governance, I think RBI as a regulator, I feel, is the best that is there across the world, right? So they've done a phenomenal job in terms of the data that they are capturing, and in real time they are able to monitor how each NBFC is doing. We actually file data points every month, and they are so advanced now that they are putting logics, machine learning tools are being put to just check how the entities are trending in terms of their overall risk profiling. So in that sense, I think our governance in terms of the entities that we have in the country, the framework is very, very strong, and we have a lot of potential on the environment and the social front.
Thank you for bringing the examples of where the MFIs can innovate in terms of products that will satisfy the transition to the green economy, such as EV vehicles. I think it's highlighted very well. You could include solar irrigation pumps also in the villages to that portfolio. So now let me turn to the eminent speaker, Jyotsna, to give us the benefit of your experience as a forester. That will bring climate also into focus, but also as to how the MFIs, both in the private sector as well as in the government sector, could potentially benefit from a social stock exchange deliberations that you are part of, where social enterprises can be admitted, and even though the work is on, you can deliberate on, it's for not-for-profit, but potentially can it be for for-profit organizations that are focused on the bottom of the pyramid as well. And ESG, we have actually, when we did put together the guidelines, ESG was also considered as part of the SSC. So may I add to what Kiran you were saying, just as RBI, SEBI is also a great regulator of the market, as we know. Yeah. Jyotsna.
Thank you very much for inviting me here, and it's a great panel with diverse experiences and expertise. As far as what I could hear and what SEBI is doing right now through social stock exchange, the part which what SEBI has done is it has clearly delineated for-profit social enterprise and not-for-profit social enterprise. Yeah. So much of the effort, since for profit enterprise, it's formalized a lot, and not-for-profit social enterprises need lot of formalization in terms of making it work with the market entities. So lot of effort is going there, but that does not mean that for-profit entities are not taken into consideration. Given what I could see is the framework for profit and not for profit is same. Right now, as Arya ji told that, same as Reserve Bank of India, SEBI is also a great regulator in terms of getting a transparent, formidable and accountable transactions organized across the market entities, especially in the space of finance. So the type of impact regulation framework that is being now developed in SEBI to attain all these transactions, I think it would be really helpful to share it across, especially with the consortium of microfinance institutions, because as India, like some of the eminent speaker Trippathi ji told that, normally we have to harp on the impact indicators of the funding agency. Normally from 2010 to 2020, it has happened that, mostly external funds have come as far as this impact investing is concerned. And it's mostly governed by GIRRS. That is a global, impact indicator instrument, basically. So given that we have to have Indianness, our own strength in terms of, developing our own indicators and make it work. It's not that investment is not coming from within, but at the same time now, a common framework would add lot of strain as far as we all are concerned. So this is one take I would like to recommend. At the same time, what we are doing in, now in SEBI at this foundational stage, in order to look into, is that whatever has been, prescribed and whatever notification had been issued, we are now trying that the application size also get reduced in terms of, because the 2 lakh is too large. So we are reducing that to 10,000 for people to contribute, basically, individually. So given that is one thing, and at the same time, the whatever the, the minimum issue size was 1 crore. Now we are bringing down to 50 lakhs. So this will help, to create traction in the market. That's what it's very important. At the same time, I already told that revision of the compendium of social, audit, social assessment, where it includes environmental and cultural assessment also. So once we are now trying to look at, look into, but at the same time, what it has been found that, everyone tells that, we have to, look into theory of change and logic model, how the impact is organized through, overall outcome, then, intermediate outcome, then output, then activities, and ultimately that comes to our input, basically, investment in terms of resources, in terms of whatever, expertise, manpower, then whatever, funding and all. So, but at the same time now, what we could see that, there's a great need to connect the dots. And once this logic framework, how it gets planned and operationalized, if, every stakeholder understand, then that, now the situation is like a big elephant and someone is feeling it's a pooch, it's air, जो क्या है, 6 अंडा और हाथी वाला कहानी अभी ये चल रहा है. परंतु it's very important for all of us to understand that, how the elephant would look like. When every stakeholder will understand this part, transaction, then we, the traction would be built. And, there's a great potential of microfinance institutions, to come into, provided we build a framework based on logic model really, and at the same time our impact frameworks match with each other. So that is very important. So we can, as we are developing, then we can really look into how microfinance consortium of microfinance institutions like Sa-Dhan would work with people like us to get a common framework organized so that transaction will be eased out basically.
So can I just request you to next round? I want to give, because the session will end in 5-7 minutes, so thank you very much to give a very hope to MFIs that they can benefit from the social stock exchange, except that some of you might say we'll have 2 regulators, not 1. So that might be still a source of fear. But before we come to the your final words of suggestions, and I want to open the floor for questions by the audience that you may have to any of the panelists with regard to how MFIs can benefit from the funds that are being available on ESG count, on the climate count, and also if anybody wants to know a little more about the social stock exchange, but at least raise the queries and we'll try our best to quickly answer. And later on as well, we can communicate to Sa-Dhan as to carry on the conversation. So any questions, any queries from the audience? Yes.
Yeah, good afternoon. I am Mohan. I am from Sampark Fin Services Private Limited. So microfinance industry is a 20 years old industry, and they have undergone lots of rating, grading, client protection. They are adhering to client protection principles, and time to time they are giving data to the SROs. But despite that, why do you feel the importance of ESG? How it will help the MFI industry? I want to know from the Trippathi.
So that is one question. Any other queries?
Hello everyone. Since we are also microfinance practitioner, my question is with Kiran sir and Diwakar sir. How do you see that microfinance entities are actually catering to the need of customer with the product customization? Because even Kiran sir said EV vehicles, we are just becoming an aggregator for the end users. But do you see that entities can develop product and services which can be environmental friendly for customers in coming times?
Any other very interesting. Thank you very much for asking this
Sir,
question.
I have one peculiar question. Means, see, if we talk about currently, yeah, right, sir. I am Shubham Mehta from NABFINS. So one question which was more interesting to me with respect to this subject. Now, under microfinance, impact funds, impact investment agencies or impact funds are more predominant rather than GSC. ESG is something which is quite complicated with respect to collecting the data, reporting, adhering to all those standards, accounting, auditing, and all those things. So how do you see whether these ESG standards or whatever, the accessibility to impact funds are more easier for any of the MFIs rather than going through the entire process, even though the premises remain same, but this is something which is very complex and it requires a lot of collection of the data, research, auditing, all those things, which may also incur lot many costs in the entire process. So whether this cost will be translating to the customer or how it is. So that's what my question is. Thank you.
This is Ajay Kapoor. The pleasure of pudding is in the eating. So yes, it's exciting to see a stock exchange, social stock exchange taking birth as opposed to the earlier overseas bonds which had a hedging cost. So they're actually more expensive. So for the industry it was no good. So how much capital has been raised, because the exchanges don't give that information, or is expected to be raised soon? Thank you.
Hi. First of all, thank you everyone. This is Abhinav Soni from Agents for Impact, a Germany-based impact investment advisor and SDG rating provider. My question is to Jyotsna ma'am. You mentioned that there needs to be Indianization of the frameworks regarding SDG and how impact is going to be measured. But again, then are we not opening ourselves to the challenge of how the international investors would be looking at this? would it not be much more important or beneficial to have a common framework along with the international guidelines and then provide it across the industries? Thank you.
So, I think in short, I think the connection between the sustainability is not related with funds or the availability of funds or the risk which is associated with the returns. I think that is the challenging point. The question which my friend asked was exactly the question that the temperature of Earth is rising. That's a simple theory actually. The temperature of Earth is rising and the climate is changing. Because of that climate change, finance is now getting risk. So if we are going to a vulnerable section of society and who are living in any areas where flood is not coming last year now, but now this year floods will come in just because of climate change. Now what this risk is, whether you treat it as a climate change risk, and if yes, then it is ESG. If it is just an operational risk, I think we are missing a point. The second thing is we need to understand we are in a transition phase, and that is why these all questions are coming in. We have developed the theory, we do not know where it is going, but we are trying to actually board a boat where we understand that yes, we want to get into a net zero emission goal, correct? Now, whether that net zero emission is something which we will achieve or not, now yesterday the report was by 2017 steel industry will be net zero. How it will happen? The answer is it will not happen. But by that time, most of us will vanish, right? So we need to understand. Again, one small thing I want to add. We are already actually late when we are saying that the data is very complex. Let me also tell you, let me also make you aware that softwares are already in market and they are under testing stage where the SDG related data is guiding. You just have to plug in just like a normal software. Even carbon calculators are already there. Now carbon calculators are also getting devised for the institutions. Same way, ESG kind of rating data is getting devised because there are so many indicators. Try to understand. 17 goals against sub goals. With each goal there are 7 to 15 sub indicators. So a normal human mind cannot process it. We need to understand we are already being sold, right? The kind of data which is getting in requires a multi-level language learning model kind of a thing. So we cannot process it. The only thing is we can get accustomed to it. Let us produce the data. Somewhere down the line, after 3 years, a software will come. We have to purchase the software, a kind of license, and things will be done. So don't worry about it.
Thank you, Dr. Trippathi. I think there is a need. But I think someone pointed out there is a cost of accessing that all the framework, then collecting data, then putting it out in the report format, report that's admissible. So there is still a problem. There is a gap between maybe like a 6 blind men. Now the second question is that even though, and very well put, we are aggregator of the requirements of the credit or the borrowing requirements. But how do we innovate and come up with new products? What is the, of course there is no easy solution, but Kiran, would you recommend any way forward in recognizing this need and to make the planet net zero? What are the ways Hegde can also respond to that?
So as you rightly said, designing products and being unique in that sense is very difficult. But the way we are looking at it is microfinance sector has grown so much in the last 3 years and ticket sizes have now reached 1.5 lakh on the unsecured side. So the way we look at it is what products on the sustainability side can we cater to with this kind of ticket sizes rather than giving just cash, which we don't know what the end use is at the end of the day, right? So that is where we are trying to innovate within those guidelines. And pushing it forward even further, all these households that we are catering to, they'll have severe housing needs that will come up as incomes are increasing. can we do, for example, affordable housing at a larger ticket size with green materials? So that is the, you know, one extreme of the kind of products that we can think about as we are going forward. And because we are the kind of lenders who are touch basing with the customers every week, every month, every fortnight, who better than us to understand this need and to get them access to these products at scale? So that is the way we are looking at it, and I think understanding the ticket sizes and matching them with the requirements that the customer will have from a energy and material standpoint will help us just leapfrog this entire journey very quickly and design very specific products which are useful.
Requirements or operational need of your customer, or you begin to look at in a strategic sense what is likely to happen to them if the floods become so common like we associate now with Chennai, just to example. So how do the mind shift is required also among the MFIs as to how they look at and also put an effort to design the products. Before I come to Mr. Hegde again, Jyotsna, you've been asked this question, why you to design another impact parameter, why indigenizations are available. Impact parameters, so impact frameworks are available. Why you want to say or propose that indigenize them? What is the unearthly need to do that? Is the question that is from the
very, very pertinent question. You know, world over indicators are there, but why should we design our own? Yeah, that was there. See, designing our own indicator does not mean that we are denying other indicators basically. But designing our indicators means we are examining those indicators in the Indian context and adapting that to the Indian context. What is happening now because of the foreign funded, you know, foreign designed indicators is, you know, there's so much of overhead cost and transaction cost. So when, you know, it's the money is for the social cause, very less trickles down where it really matters. Most of the overhead cost is going on impact management basically. Yeah. So we have to be very careful of, you know, and high-end professionals and, you know, city-brought children, they must mostly go and do the impact, you know, evaluation on the ground basically. So, you know, there's a danger of, you know, much of the impact washing happen. So this is important. So it has to, you know, when you don't sense the pulse, then, you know, everything goes wrong. So, you know, report-wise, you look very, you know, good. It looks very good. But, you know, what's happening on the ground, no one will know. That's why. Thank you.
Okay, thank you, Jyotsna. Making your life simple, she's saying. Somebody has to do that work. Okay, Mr. Hegde.
Okay, I'll be very brief. Somebody was asking about the product designing. I feel if you see the regulator's perspective, our microfinance loans can finance any activity. But if you see our most of the activities, even in your own institution or my own institution, 80% will be catering to the E and S in one way or the other. But the challenge is how to capture it and project it and measure it. So that one, the framework has to be developed. Second thing is whether we can develop a new product or existing product can be redesigned. So that these are the possibilities you have to think about it. So for example, I'm having a product for water. Whether we can say that if the water saving techniques are used, I will give 0.5% discount in my rate of interest. Or if I give 1% discount for if you are adopting some renewable energy sources. So this kind of tweaking of your own product is also possible. Or if it is, you want to measure specifically, you can have a new product, but you know that cannot be decided in this. It has to be decided in your own lab. So that is the requirement.
Thank you, Mr. Hegde, and one word by you, and then okay. I want to summarize by saying that actually the conferences like this are perfect places for cross-learning and dissemination of ideas, cross-fertilization. So we must compliment Sa-Dhan for organizing such a thing and having great audience as well as the panel. 2 or 3 recommendations. One, Sa-Dhan should play a role with the social stock exchange. How MFIs, which are mostly for-profit organizations, can benefit from its new framework. And I'm going to urge Jyotsna, but I'm going to also tell Balu, who is the head of this panel in the Social Stock Exchange, that can we bring MFIs within the ambit and more actively in more accelerated way. Kiran and Somya and others can benefit from the Social Stock Exchange, even if there's another regulator like SEBI. Second thing I want to say is that the gap of the information between what are the standards available and are applied to by the financial organizations to and the knowledge and experience and current practices of the MFIs. Can Sa-Dhan play a role of bring something by way of mechanism? So such questions can be answered, and the anxieties of the MFIs present here and not present here also can be addressed. Third thing I want to say is that the impact measurement is something that one has to look at in long term, but if the funds come, I'm putting words in your mouth, Jyotsna, but I think it's important to first say that these are the outcomes we will achieve, not necessarily the impact, which is a long term, but bring climate so you can achieve social the impact in shorter term also, such as with SRIs, you can do that, or we can do with sugarcane also. So three broad recommendations, and I will compliment my panelists here to allow me to talk to you, and request you to come with the great ideas. Thank you very much for this. Thank you, the audience.
Much, moderator of the session, for wonderfully conducting and concluding the session. I'm sure there must be some more questions. We can take them during our networking lunch. Ladies and gentlemen, we would like to extend our heartfelt gratitude to our panelists. And may I request Deputy Director Sa-Dhan, Mr. Somesh Dayal, to kindly join us on stage to present mementos to our panelists. We would like to present a memento to the moderator of the session, Mr. Arya. Thank you so much, sir, for your valuable inputs. May we all put our hands together as we are concluding the session. We present a stole and a plaque. We'd like to present a memento to Miss Jyotsna Sitling. It's Jyotsna Sitling. We now like to present a memento to Dr. Diwakar Hegde, and may I request you, sir, to kindly step forward. Dr. Diwakar Hegde. We also thank Mr. Kiran Kumar, presenting a stole and a plaque. We also thank Dr. Agyeya Trippathi. Thank you so much, sir, for your valuable inputs. And thanking one of the youngest panelists, Ms. Somya Srivastava. Thank you so much. A stole and a plaque. And may I request all the members on the dais to kindly step forward for a group photograph. I'll also request Mr. Somesh Dayal to kindly join the panelists for a group photograph. Ladies and gentlemen, with that we conclude this session, and we would now break for networking lunch. We would begin with our next technical session, which will be followed by a few presentations and thereafter the valedictory. That will all happen in the main hall, the convention hall. May I request you to join us right on time. We would like to begin sharp at 2:30, and I request you to kindly join us 5 minutes before that. Thank you so much. Please take care of the belongings. In case you have misplaced your belongings, please check with the registration desk. Thank you.